want to take a look at some Chinese stocks today, those listed in China itself or some in Hong Kong. This is Pinduoduo, which you see was up 7.22% today. I'm using MarketSmith. You can see that right up there, $4.80. And this has also been up for the week. The company did report earnings recently, and you did see a nice gap up here when it did report. So the other thing that's going on with the Chinese stocks is there was some fear for several months, fear in quotes, that some of these would be delisted, some of these that are trading on the U.S. exchanges as ADRs, American Depository Receipts, which allows overseas companies to be listed and traded in the U.S. There was some concern because China was not allowing U.S. regulators access to some of the audited accounting documents for some of these companies. Now, I never thought for 1 second that the US and China were not going to come to some kind of agreement about this. There's too much economically at stake. And yes, it was announced that the deal is in place. It was resolved. So let's go over here and let's look at FXI. This is an ETF consisting of large cap Chinese stocks. And you see that did rally today, but if we pop over here to a 5-minute chart, you see it almost kind of closed the gap. There was that high price from yesterday, 30.24. It closed today. Well, it closed today at 30.21. So it did actually close that gap, but still managed to be an upside day of trade over here, gained 61 cents, 2.06%. So that's not too bad. And you did have some heavier volume, up 4% today. So there is some enthusiasm right now about these Chinese stocks because, yay, the deal has been struck as we all expected, but now it's official. Okay. Now, should you own an ETF like this, or should you own individual Chinese stocks? And as with many things in investing and trading, the answer is it depends, right? So you want exposure to other regions besides just the US. If you're a US investor, if you're watching this from overseas, you also want exposure to regions outside your home country or home continent, that kind of thing. Now, for that kind of broad exposure, an ETF is the best. You could even jump into, say, an emerging market ETF or something more global. But if you want to take a look at single stocks, I always say you don't want to overload in any one industry or sector, okay? So you want to be careful about that. You want to be sure that if you own Baidu, let's take a look at this over here. If you own Baidu, which also rallied today a little bit, okay, you also don't want to own Tencent. Is it just me? Am I the only one that thinks of 50 cents when I think about 10-cent holdings? No, not you, just me. Okay. Anyway, they're in similar businesses, internet content. They're both exposed to sort of the vagaries of the advertising market right now. So you want to be careful you don't have too much exposure to any one industry if you are owning single stocks in your portfolio. That's just a general rule of thumb, okay? So if we pop over here to a weekly chart for Tencent, you can see it's kind of, a little bit of a rally over here. What is Baidu doing over here? It's consolidating. A little bit of a rally here as well. Not so bad, but you do see that what's been happening is a decline in earnings growth over here. And the revenue has been slowing as well. If I go over here to Alibaba, you see the same thing. You see 77% year-over-year growth, down to 46, down to 36, down to 13, down to -4, okay? And you do see earnings declines. Now, these are not losses, right? They're just year-over-year earnings declines. Still not exactly what you want to see. And also what is happening is these companies don't have much visibility right now into what the ad revenue is going to be in the third quarter. That's a little concerning, okay? Sometimes that can turn out better than expected. Not saying it's necessarily alarming, but it is a bit on the concerning side. So if you're looking at single stocks, just want to caution you, Always take the fundamentals into account as well as the chart. You don't want to use one without the other. And come back to the FXI, and there's other ETFs that track China as well, by the way. This is not the only one. It just does happen to track some of these large cap names like the ones I've been showing you today. So you just want to be careful. If you want a broad basket of stocks as exposure, you can get an ETF. Nothing wrong with adding some single stocks, but you want to do it very deliberately, very thoughtfully, understand what's going on. And in situations like these stocks that we're looking at right now, I'll just end up with a look here at Alibaba as an example. You see that it's actually, go over to a daily chart, you see that it's holding up above that 10-day moving average and above the 21-day. But it's below its 50-day line and below its 200. And you've got a situation there you don't really like to see, where the 50-day line is below the 200. You really want all these shorter term averages to be above the longer term moving average. That's a more healthy chart that you want to see. Analysts do have some pretty good expectations for Alibaba and Baidu in particular for when it comes to the price target in the coming year, not necessarily the earnings growth, but the price targets. That is some optimism. And if you want to get in on a stock early, perhaps that's a place to take advantage. However, you also want to be careful about parking money in a stock that does not currently have upside momentum, because there is an opportunity cost. Okay, that's a look at some Chinese stocks today, as well as a look at ETFs versus single stocks. Hope you found that helpful today, and thank you for watching.